that make people decide to invest in life insurance to protect their children. And oftentimes, when you talk of life insurance, people think of death. But today, we're not talking just about death. What are the living benefits that are locking in this life insurance? What are other people doing that we are not doing as a community? What are the opportunities? Back home, it's a different ball game because you have your relations, you have your sisters, aunties, uncles, everybody seated. But in Canada, there is a system. So today, those who we are looking for are those who want to be debt-free. If you want to be debt-free, you want to enjoy your family, you want to go on those sort of vacations that you're looking out for. You want to think of living in those kind of houses, those dream houses. How do people raise funds to live in those houses? And how are those houses protected? Those are the things that we're going to be talking about today. You're talking about what about driving the kind of cars that you're interested in? Those vacations. Providing the coverages for your children. A family that is happy. Mother is smiling. Father is smiling. Everybody's happy. Those are the kind of things that we're talking about. I don't know if anybody's over there that can, move the slides quick for me so that we can move fast. More importantly also, if you're looking forward to generating wealth, in Canada, there are families that are so wealthy, not because they are smarter than you, but just that they've done something you're not doing. There are opportunities that are locking. A lot of people who are in Canada are basically not in Canada by the virtue of how much you earn and what you do. Yes, we live in Canada, but your livelihood is not where it's supposed to be. I can tell you you're probably at the borders of Canada. There are people who raise, there are opportunities in life insurance that can help you create those sort of generational wealth. So that your children will not be asking you, Daddy, Mommy, where were you when others were doing this? These are the reasons why the pastor has called in that we should show our people what are these opportunities. So that we don't struggle so much that we forget the real reason why we live. So what is the thing? Like I was telling us, sometimes when you wake up, you find that there are people who keep, going to the malls, shopping all the way, doing different things while we go to work. They are working. They go shopping, vacation, and all that. Most of them have been provided coverages that enable them to enjoy this kind of life. So today, what are we interested in? There are two basic things that I would like us to understand. One is what is called the term life insurance and also the permanent insurance, which is like a whole life insurance. And what are the benefits for you? What is in there for you and for your children? Without wasting much of our time, I'm going to be calling on Mr. Adnan to share some experiences that has to do with life insurance. What is it? What is term insurance? And also what is whole life insurance or permanent insurance? Thank you very much.
Thank you, Johnson. Thank you. Thank you. I would like to start with a small joke. A taxi driver from New York and a father for Mary Church went to heaven. St. Peter gave to taxi driver a robe of silk. And when for father of St. Mary, he gave him robe of clothes. Father was mad. He said, why to taxi driver you gave him a robe of silk and me a robe of cloth? He said, no, in the heaven here we work by results. When people sit in his car, they pray. When people go to your church, they sleep. I think in this church nobody sleeps here. And you will be getting the silk robe. Well, you know what? I thank you. Even we don't have so many people here, but I will tell you something. I promise you something. When you go out of this room today, you will learn something that will be valuable for you and for your kids and for your relatives. And this message, you will pass it to your friends, to your relatives. And you know what? We are here a newcomer. I came myself as an immigrant. And I know how tough it is to build yourself and to start your life. We're starting from zero and sometimes below zero. Honestly, I came as a refugee here, but you know what? By working hard and planning and doing things properly and being disciplined, things will work out. You know what? For this subject, to talk about life insurance, disability, retirement, I don't know how much time we have, 1 hour, somewhere there. We wouldn't be covering a very small amount of it, really, not much. But you know what? At least we'll go to some basic stuff, and I am willing to take questions, and hopefully we'll be able to answer those questions. But we will go to some basic things that will help us on day-to-day basis, and how these will affect our life, our kids' life in the future. Really, in this country here, everything's by planning. Nothing happens by coincidence. I am here today, it's maybe coincidence, but it was planned. So for us to be successful, I'm not talking about, we are talking here only about financial thing here. When I say financial aspect of how doing things properly in financial aspect, nothing more, nothing less. What affect us not to proceed or be successful? Really, I mean, the main thing is not planning. Simple. People fail to plan. That's what it is. Nobody plans to fail, but they fail to plan. That's easy. Now, if we plan and do things properly from the beginning, things will work out. Yes, there will be some humps and some things, distraction, but as long as we be disciplined, we know where we're gonna go, we will reach our goal. No doubt about it, really. Maybe instead of 2 years, it will be 3 years, but we reach our goal, no doubt about it. I will focus on 3 areas that could be problem for us as a new immigrant here in this country. And these are things, maybe we don't take them that seriously back home. Look after 3 things for their future and for their planning will be, number 1 is death, which is life insurance, what Johnson was talking about. We'll go simply and explain something about that. So if we think about the life, and which is a crucial thing, somebody dying in prematurely, with independent kids, with mortgage, with financial liabilities, loans, that would be disaster to the family, correct? Honestly, yes, death is, we cannot avoid it. We're all gonna go die, no problem. Taxes and death is there. But we could plan for it. We could not replace husband or wife or brother or sister, but we could replace the income they were making. And that's our job, to help you to do that, really. Yes, devastated financial person or family will be devastated financially if the breadwinner will pass away prematurely. So death is number 1. Then disability. It's another important thing. If we plan and if we save money, and if somebody is disabled for few months, all the saving they have after a few months will be vanished. So really so we have also to work and plan for disability. And the other aspect is retirement. Well, if we live to 90 or 100, and by this time, a lot of people are doing that, and if we retire by 65 or around that age, and we have another 20 years to live, if we don't plan properly for those 20 years while we're not working, we will be burdened on others. Do we have to be burdened on others? We have to work on that, and we have to plan from now to living those retirement years in comfortable way, really. So I think we will go just briefly explain on those 3 areas and see how we could work and how we could plan in those 3 areas that will help us and our family. So we'll start with the death and premature death. Basically, premature death that's crucial. If I'm 40 and I have 3 kids and I have $500,000 mortgage, if I pass away and I'm making $70,000 a year, my family gonna lose the $70,000 a year I'm making now, But not only this, they're going to lose the 70,000 years till I am 65. So if you multiply the 70,000 year I'm making now till age 65, that could be over $35 million. So my financial worth to my family is $4 or $5 million, really. So if I insure myself to my family, if something happens to me, if I am gone prematurely, I'm killed by a drunk driver, they will survive and things will be moving smoothly. They will pay the mortgage, the kids will go to university, there will be no problem. And we have ton of example. I've been, as Johnson said, been in business for long, and I have seen those, I have paid few life insurance claims, really. And I remember a few of them, I will share a few of them with you. But just for that, actually what happened. We have a client, we insured him. After 4 years passed away, and he was only 43 years old, 3 kids, and $350,000. It helped the wife to keep the house, to raise the children, and one of the children was able to go to university, and she is pharmacist now. If it wasn't for that $350,000, the mortgage they couldn't be afford to pay. The wife has to sell the house. The kids, they wouldn't be able to go to university and finish their education. They have to go and work and sacrifice and help mom and the other kids. You see, now I see those things, and this is actually, I see them, I see the pharmacist. I'm so happy because we did our work and it helps the family. We have other cases like, honestly, I have one case that was a long time ago. Wasn't a big policy. Was $50,000 only. But I remember a client died of lung cancer. He was a smoker. The funeral home called to make sure the life insurance was in force because they were refusing to take the body to the funeral home because the family, they didn't have that deposit to pay the funeral home. Can you imagine somebody in that situation? How bad is it? Really, we came here not to be in those situations. And life insurance, when we think about it, oh, it's something we don't worry about it and we don't care about it. All we care about car insurance, home insurance, and those. But life insurance, really, it has a purpose and it's worthwhile for young people. The thing is, you have to start it when you are healthy and young for 2 reasons. When you're young, you buy a lot of insurance, a lot of cover for a small amount of premium. But if you wait, you are 60 and 70, instead of paying $30 when you are 20 or 25, you're going to pay $700 or $800 when you are 60. Is it worth it to wait? That's only, not only premium will go up, but who will guarantee that your health will be okay during all that time? Something will happen. Actually, I was emailing a client of mine yesterday. He was complaining about the rate of, I say, well, you know what, you're lucky you got a policy, because in this COVID situation, our company decline rate is 25%. When we put 10 policies with the company or 100 policies, 25 of them are declined. You see, no, people, they think they are healthy and they could afford it, but the insurance company, they do their checking, their blood profile, and they do a lot of checking. They find out the client is not worth writing him. So this is why when you're healthy, that's the time to do it, not to wait when you are old. And this is, the sooner you do it, the much better. With life insurance, I say this subject takes a long time to talk about it, but in briefly, there are couple, basically 2 policies. Term policy and universal policies or permanent policies. Term policies, they do both protection, but with the term policy, they give you protection for certain term. And most companies, they have term 10, term 15, term 25, term 275 or 200. The term policy, there are some disadvantage for term policy, but they are, from price-wise, they are the cheapest one to start with. The disadvantage of term policy, the premium is not the same for the, only is guaranteed for the term. Let's say you purchase a term policy for 25-year term. Company will guarantee your policy for 25-year term, that's it. But what will happen after 25 years? Instead of paying $40, $50 after 25 years, you're going to pay $800, $900. So that's one of disadvantage. Does it mean term 25 is bad policy? Not really, no. If I can afford only $25, then this is the policy for me. And this will do the protection. If something happens to me for 25 years, my family gonna get the money. And the 25 years, the kids, young kids, they are grown up and independent now. I don't have to worry if my intention is to look after my kids and mortgage. But you could, this term policy, the other disadvantages, they expire. They are not for life. Most insurance companies, when I started in the business, they expired at age 65. Then they extended it to 70, then to 75, 80. Nowadays, the policy expire at 85. Even if you are willing to pay insurance company $10,000 a month, they say, forget it, we will not insure you past 85. That's the term policy. The other type of policy is permanent policy, which is more expensive. I will recommend it for younger people, for kids. That policy, premium will never change, same premium. And the other thing, this policy will never expire. So definitely this policy will be paid for the beneficiary. But you could convert the term policy to permanent policy anytime. With our company, you have to do it before age 70. Basically, that's life insurance. And you know what? But there are some other aspects of life insurance. You could have your beneficiary, the designated beneficiary, any person. But sometimes, for charity purposes, you could have a beneficiary like charity organization. If you have no dependent on somebody to, by designating beneficiary to charity organization or church, what you could do here, the payment you make to the insurance company will be deducted as tax deductible. And that's worthwhile, of course, for some people, they believe in certain cases, really. I mean, I have a few policies written like that. Sorry, I need some a lot of people also, they don't know about life policy. It's not only for the, if you die, the beneficiary get the payment. In certain cases, the insured himself, he could apply for 50% of the cover. Let's say if you have $500,000 of cover and you are diagnosed with terminal illness, you could apply to the insurance company to take out of the $500,000 policy, $250,000 of cover for you. And the 250 will be your family. So that's possible. It happens, but rarely happens. But that's another thing. Life policy also could be for buy and sell agreement, like two partners, they go into business together. Each one put $500,000 in the business. They insure one against another. If somebody dies, the other person could buy their share and keep the business. So there are other benefits for the life insurance. It's not all. So that's another one will be for taxes. If I have 5, 6 investment properties, if I die, the Revenue Canada, they expect that I am selling all my properties by the year I die. So what will happen? They will go and calculate the capital gain on each of my property that I sold, which when the year I died, and they need their taxes, which is high taxes, believe it or not, almost 50%. So if I would like to pass those investments to my kids, then what I have to do to avoid them pay taxes or sell some of the property to pay the government the revenue, I will buy insurance in the amount of taxes I'm supposed to pay to the government. So in that case, when I die, the government will take the taxes from my life insurance policy and the properties will stay in the family. So that's another part of it. So I think that's about life insurance. Before I move to another subject, to disability, any question about life insurance? Somebody has any question? Or if you have any question later on, ask Johnson, and Johnson, we will get you the answer. So if you look after the life insurance part, that's number one. Really, I think we think about car insurance, I said, home insurance, like we are insuring the eggs and not insuring the chicken that brings the eggs. So that's the problem with us, most of us, really. I have some clients and I get mad of them. They will insure a car, it's worth $7,000, $8,000. They still insist they need full cover on the car, which is $40, $50 to protect $5,000, $6,000 car, but they will not insure themselves, which is worth 100 times more than the car. So with the disability, now disability is a little bit different subject here. There are so many ways of doing disability insurance. If you are working with a company and they have a group insurance at the company, there are some cover for you there. There are short-term disability, there are long-term disability. If you are working with a company, you have a group insurance there, there is cover there. That's not bad, but that's not enough, because that cover covers you only if something happens to you while doing the work with the company. But if you are disabled outside of the work, that policy will not cover you. With disability, really, what factors determine the premium of disability is type of work you do, the income you would like to plan to get if you are disabled. Disability policies, usually we have two types of disability. One will be for in case of injury, if somebody is injured, or in case of illness. And there are two types of illness policies. One, any type of illness, regardless, any illness that will prevent you from doing your job you are supposed to do and you cannot do because of illness, the insurance company will pay you the premium the benefit you applied for. That's illness part of the disability. And there is another disability, we call it critical illness policy, but this one is different from the illness policy. Critical illness policy will pay the client only for the specified illnesses mentioned in the policy, which basically they are mainly, the three more important ones are cancer, heart attack, stroke. So if one of those happens, the insurance company pay the lump sum. You agreed to, let's say you bought 200,000 policy and a client was diagnosed with cancer. So the insurance company pays $200,000 to the client, lump sum one time. Now the client is, while he had a cancer, he's thinking of so many things, and sometimes these drugs for cancer are very expensive. This policy will help really to lessen the impact of this disease to him and to his family. And this financial money come to him while he's not working will be crucial to keep going on, pay mortgages, pay bills, look after kids and education. So that's the critical, and we said illness, any kind of illness, but critical specified illnesses. There are 26 of them. Now, how this policy works? If I buy like injury policy, if I am injured for any reason, I cannot do my work. If I buy a policy, there's three benefits, three periods of that policy. I could buy a policy that pays me for 2 years, or pays for 5 years, or up to age 70. Let's say I buy a policy for $3,000 per month. If I am injured, the insurance company gonna pay me, if I bought to age 70, $3,000 a month to age 70. So that policy really will be very helpful. If I cannot do my work, $3,000 is not a small amount to keep going. That disability, it's important for people at the working age, not young people, not people in retirement. So we say the death, crucial, but it's important from even age 0 to age 90. The disability is important from working age, let's say 25 to 65. Anytime during the working period something happens to the client or to anyone, there will be a very, very devastating to the family. So this is disability, is really not much about it. The thing is, if you are working for a government, there is some employment insurance if you are sick, but they pay you only for 4 months, no more. And after 4 months, you are on your own. So if you have no other policy, no other insurance to cover you, really you have to spend all your saving you have, or sell what you have to survive. There is not much benefit there for you with the government. The only thing is, if somebody is injured in car, there is some cover for in the car insurance policy, but that's also minimum, and there's not much cover there too. Somebody has any question about disability? It's okay. I hope nobody will be disabled. Now we'll talk about retirement. Retirement You know what? Everybody, this is why when we would like to discuss these policies with the client, they are so personal. We cannot just you go online and put some numbers. We have to talk to the client to find their ambition, their lifestyle, how they would like to spend their retirement, what they have in their mind. You see, each person, there are no two people are similar, really. This is why we ask so many questions before even talk to them. Somebody the other day called me, I have 350,000, I would like to put it away. I said, well, you know what? Before I talk to you, I would like to know how long you would like to have this money for. I have this form, you have to fill it out for me, then we'll talk. So we have to know really how we're planning to invest this money for how long, what's the reason, how is risk tolerance. You see, some people, they don't want, when they put money with insurance company, if they see their money going down a little bit, they get scared and they would like to take the money out. But you know, if you watch the news or if you follow these financial advisors, they tell you all the time, the investment, even it goes sometimes like this and goes up, but if you see the history, no matter what, where you invest, no matter what, start from here, it jumps here on the long term. So even on short terms goes down, but on the long term is there. But this is the retirement. Now, retirement for retirement, and it's part of the financial planning. I will ask a client really, few things we have to cover. What they do for the kids' education, that's part of the financial planning. What they do for their retirement, what they do if they don't have a house, if they're planning to buy a house, what they are planning to buy a house, what they're doing. So for those, there are so many ways of doing it, really. It's not only putting money under the mattress that wouldn't help because it will not grow and will go down. But you see, with this financial planning, the two important thing is that why you need somebody to help you with that, because everybody does financial planning on their own, really. When you receive your salary, you know what to do. You pay this for mortgage, you pay this for bills, you pay this for grocery. We do that in simple way. But what we miss and we don't do it regularly, and we don't see what's going on. We just leave it for the chance what happens. Oh, I have 5,000 in the account here, 7,000 there. I pay this interest here, I pay that there. You see, that's losing focus. If you know what you're doing and what interest you're doing and what you're buying and how you're buying, that affects you really. So I tell a client, you know what, believe it or I give you a simple example. We have a lot of clients. We have one of the busiest offices in I would say in GTA. People pay NSF fees, $45 each time we go to their account and there is no fund there. It's sad. We try one time, $45. We try second time, $45. And bank will charge another money there. So not having money on your account on the time we go to take your premium, and you know what? This money accumulates. 25 here, 35 here, 45 there. Why we have this problem? This is something avoidable, correct? It shouldn't be happening, really. I know my payment. This is on this day. This company is taking this money. I put that money there. So I wouldn't have to risk paying those extra money for nothing. For nothing. It's gone. Company and banks are making money out of you. It's really, it shouldn't be happening at all. So the problem is, this is where we, Johnson and me, we could come help you. We show you how to be disciplined. We show you a plan that you put this money on regular basis. On regular basis. That's it. That's the trick. And this is the key. If you do, well, I have 50,000, let's say 150 extra, we're going to put this money here. Or this month I don't have, let's skip this month. Doesn't work this way. What you should do for your retirement or for any saving you would like to do, before you put your money and you spend your money, you have to say 10%, 5% of my income I am putting aside. And that's how it is. And that's the only way you're going to work. And that's the only way you're going to see really your money grow, and you could do and achieve what you would like to do. So pay yourself first. Pay yourself first, and that's the key for the retirement, really. With the retirement, I'll give you a couple examples on how to achieve those things. There are RRSP and there are TIFSA. What's the difference between RRSP and TIFSA? RRSP, I think I like it, and I personally I use this one a lot. For two reasons for RSP you do it, and actually if you do it between January 1st to end of March, so that you have those 3 months window, any investment or any participation in RRSP for that period, you could use that deduction for the year you are, let's say in 2022 or 2021. Only for those 3 months. But let's say I have $5,000 today and I would like to put it in RRSP. What will happen when I go and do my taxes for this year? If I have made $40,000, the $5,000 will be deducted from my payment when I pay my revenue Canada taxes. So what I'm going to pay to the revenue, not based on 40,000 I made, will be based on 35,000 at what I made. So $5,000 will be saved for me. I'm not paying taxes on $5,000, and that's not bad. Out of $5,000, it could be $1,500 taxes saving, which is not bad. Why this goes to the government, $1,500? It's for me. But the only thing, since the government is saving you taxes and not paying all the money for them, they demand you that you don't take this money till you reach 65. So by 65, when you're retired, you could take this money, and you're not making that much money. Even if we withdraw that money at 65, you are not paying that much taxes. So that's the idea from RRSP. Actually, I will encourage everybody to pay in RRSP as much as you could. There are limit, 18% of your income. Most people, they don't use the limit. Even some people, they don't have nothing there really. But that's one way you have to have RRSP in your portfolio, in your planning, because that money, when you put it in RRSP, you will not touch it till age 65, and that will come to you. Actually, I remember I have one I put a few years back, small amount. It's doubled almost in 10 years. Doubled without doing nothing. So, but not only that, my thinking of not paying taxes in the beginning. So I'm doing two things. I'm not paying taxes here. This money is saved for me with interest. At the end, I'm getting that money at 65. That's one way of doing it. The other way is TIFSA. TIFSA is different between RRSP. TIFSA is you invest money with the bank or insurance company. The thing is how much money, there is limit, I think 6,000 a year. And if you don't put that money in 1 year, you could add it to the year after. They will tell you how much limit you have. The good thing about TIFSA, when you any time you invest with the bank, believe it or not, even if it's $2 interest you receive from the interest, money you have in the bank, they give you T3 slip that you should tell your accountant, I made interest of $2, or you have to pay tax on $2 interest you made on your investment. With TIFSA, there is no tax. You don't pay taxes when you take money, and it will grow there. So, but the thing is, you don't get any saving from the revenue when you do that. But when you withdraw the money, there is no tax implication when you take that money from TIFSA. Well, I don't know if anybody has any questions regarding this one. Anything? Any questions about any insurance? Was it any benefit here? Did you find any benefit? RRSP. You could pay up to 18% from your income. It's a lot of money. A lot of money. Yeah, you could pay monthly or one shot. It's up to you. What's up to you? $50 a month you could do. There is no limit really. But there is a maximum limit you could. I cannot put 100,000 if I'm allowed to do 50,000. So there is limit. They penalize you if you put more. You don't have to put more. Question? Yeah, I'm listening. Guaranteed life insurance? Well, you mean cash guarantee or payment guarantee? This permanent policy is payment guarantee, no change in premium at all, no change in the cover, and the policy is as long as you live, which is really meaning this policy is going to pay no matter what. But you buy it, it's expensive if you buy it at age 50 and up, or even 45 and up will be expensive. It's good, those policies for people who are young to start with, really. It's not bad policy. If I bought few of those, and you know what, they paid, have a lot of cash value in them. I bought them when I was single, in my 20s. So really, it's starting these, they will come handy. You wouldn't know. People, they don't think about those policies really, but they are good. The cash value grows, the benefits is there. The only thing is, you see, with life insurance, it gives me peace of mind. I have kids. If I don't have to worry about them if something happens to me. Yes, I love them. I care about them. But you know what? I would like to see they are okay if I go. That's the point. Really, we brought them to this world for a reason. We have to look after them. They are our kids, correct? So it's something, it's not selfish. It's something for people you love. That's what it is. Yes? Sorry? Kids, yeah. Okay. You know what? That's a good question, life insurance for kids. Actually, before you go, I have some goodies here I would like to share with you. Some calendars, 2022, some bottles, some few things here. Life insurance for kids. You know what? Before you do for kids, I would recommend the parents have one. Because no point having life insurance for kids if the parents disappear and they cannot pay the kids' policy. But if you are protected and you have your own policy, it's not bad having for kids. For
Praise
two
the
reasons. You know what? Financially, emotionally, is too much to bear if you see your kids die, correct? But financially, it's not that much like a parent with when they die. But the kids' policy is good for two reasons. Number one, you buy it at young age and healthy. That's excellent. Excellent. At that age, you buy a big amount of policy and it will, most likely they are healthy, number one. Number two, they have a good time to have money built in this policy. They buy it at age 10, by age 65, the premium in this policy will grow, especially if the plan is an investment plan. Because with this permanent policy, part of the premium is premium for insurance, the other part is investment. Really, that's what it is. So the investment part for that long period will make good difference, very good difference.
Okay. So my question is, what happens to your policy if something happens to the insurance company?
I didn't get that one, sorry.
What happens to your policy if the insurance company liquidates or goes down?
Goes bankrupt?
Yes, if the insurance company is bankrupt.
You know what? In all my years, I haven't seen life. There was one. Yeah, there was one. But you know what? Insurance company, they are regulated and they have their own insurance. If even they go bankrupt, they have cover on this, like a deposit in the bank. But the thing is, what happened with that life insurance company that went bankrupt? The insurance company, they don't like to lose their reputation. They buy it out before it goes out. But you know what? Government is watching them. They see how they are secure and this. So before they go there, they are watched. And there are other insurance companies willing to take over and buy that policies. They buy those policies from the insurance company. So I never seen in my life one person lost because of life insurance. Never, honestly. But maybe you want it, maybe with mortgage insurance sometimes, what happens? Because I will have to give you one example about mortgage insurance and life insurance. It's the same, but when you buy mortgage insurance through the bank, it's different when you buy it from the insurance company. The difference is, and a lot of people, they don't know that, especially when they buy a house and they are excited buying a house, they go and buy a mortgage. They take mortgage from the bank. The bank convinces them to buy mortgage insurance. And usually the payment of the mortgage insurance is lump sum with the amount of the mortgage. So if they pay $3,000 mortgage and they pay $150 insurance, mortgage insurance on top of it. So the client is paying $3,150 and is covering everything, and they don't know the details really. With the mortgage insurance through the bank, they don't ask you a question when you buy this one. They don't. When death happens, they do the underwriting and they ask question, and that could cause a problem. Let's say they bought the policy and there was something not disclosed at the time, and when the bank would like to do the underwriting after the death, they found out there was an issue, and that was supposed to be disclosed. In that case, could be a problem. With us, we don't have this issue with the life insurance company because we do our underwriting in the beginning, and we don't wait. When death happens, we just pay within a week to 10 days. Payment is made. No question asked. That's it. So that's the only thing with the mortgage insurance through the bank, because they don't do the underwriting in the beginning. They do it at the end. I don't know, was any useful here? Was it because I'm really keeping you from this nice weather with this time to talk to me or talk to you? And hopefully it was beneficial, and there was some advantage and something good. Johnson is our new addition to our team. I would like you to help him, talk to him. Honestly, we would like to work together. Our office is mainly family office. My wife, my kids, they work. We have Johnson and somebody else, Ahmed, that's it. But our office is one of the busiest offices. We work very hard, and you know what? We cannot keep with the codes, believe it or not, honestly. I don't know. I thank God, I praise God for all this. Usually I do that, really. I'm a Christian too, but I think God is helping us. Honestly, there is something there. I don't know, but things are working extremely well. And I'm appreciating, you know what? If somebody went out today with one extra knowledge, I'm happy with that, really. But I'll give you one more knowledge. I think nobody will know about it. One. Do you know where insurance started and how long ago? You know what? I am from Iraq. Insurance started in 2,500 years before Christ.
Wow.
Code of Hammurabi, that in that code, there were how the kingdom will compensate the subject if they lose or their property damage or something. 2,005 years before Christ in Iraq, in Mesopotamia, believe it or not. But you know what happened there, and we took advantage of those beginnings. Now we develop it, and so much sophisticated, and so technology came. But the beginning was there. Beginning civilization was there. We are the beginners. Really, we did a lot of this work. But you know what? Unfortunately, back home now is not the way it is. I think we suffer from Daesh, you suffer from Boko Haram and that kind of thing. So, but you see, but unfortunately, this is happening. But we have God. God will with us all the time. To tell you the truth, I was in Facebook today. One of the villages that was destroyed by Daesh in 3 years ago, a Christian village. They are building a Christmas village in that damage they did. Christmas village. After 3 years, they are doing this with bricks they destroyed. They brought the bricks, they destroyed the churches, and that bricks they building those villages for Christmas villages. Well, if you have nothing there, anything, if you have any questions, I am here. If you have some questions later on, come by, call me, call Johnson. We're more than happy to help you guys. Thank you for your time. Thank you for your attention. It was nice talking to you guys. Thank you.
Thank you very much. Thank you very much, sir. Thank you so much. Amazing. You know, if you want to clap, just put your hands together for him. Don't pretend. Don't pretend. As we round up, you know, there's something that makes a difference. Mr. Adnan is someone that I've worked closely with him. You see, when a millionaire in dollars is talking to you, you must pay attention. Hello. This guy is humble. You know, when somebody is telling you God is helping us, we are doing with this guy in Canada, he's one of the best. And that's why in the office we're so busy with, you know, clients, because we have lots of clients referring clients to us. For me, we try to make members of our community better off. The reason why we're here is to share this information with members of the community, whether it's life, whether it's auto, whether it's home insurance, mortgage insurance, so that you are aware what other communities are doing. And for some people who are listening, if you do have questions, you can reach out to me. And if you do have business and you want us to help you, I'm very much available to help you, such that we are not at a difficult time any day. Oftentimes when life insurance is discussed, people say, don't worry, next week, next month. As we are about to end this year, life insurance changes with age. So we have few days to the end of 2021. What your premium is supposed to be this year, after 2 weeks, it will be different. It will be higher. Because the younger, the better. The older, the more expensive. And we say, because I've seen people in this country doing very well, everything working, just one illness changes the situation. It's not our portion. That's why we pray. But the Bible says wisdom is profitable to direct. Again, there is no reason for anybody to be locked in debt. It's good to borrow money, borrow to invest. But guess what? There are opportunities for you with life insurance, such that if you have maybe a mortgage, line of credit, and all that, for any reason you check out from planet Earth, the insurance company comes in to pay all that debt. Hello? That's what it's explaining. If you have a mortgage, for any reason, you're no more, and you're protected, your family is not going to live outside. Even though people are going to cry, but there's enough money to take care. And people go as far as insuring their parents. Put their parents under insurance. A lot of people do that. For any reason, they check out of planet Earth. While we are crying that, oh, I lost dad or mom, there's $1 million waiting for you. Hello? Will you? You have a question? Yes, sir. Naturally, what happens is that if you are in Canada, if you're a PR, at least that's from PR, or you've applied for it, you're already in the process. If your parents are here, for instance, they are PR or they've come in, they've applied for it. If for any reason they check out, I see a lot of people do that, particularly a lot of people, they do that. And once that happens, they are crying, we lost our parents. But guess what? There's $500,000, like a button, to change the lives of the living. Even though the Bible has told us that we should not borrow or lend to nations, imagine going back to God with a debt. Hello? Imagine going back to God with debt. Other than to say somebody checks out of the earth, you meet Angel Michael over there in the sky or in heaven, and you say, come on, Angel, I just checked out of planet Earth, and I have a check of $1 million for my children. What do you think? He said, come on, sit at the right-hand side. Or you want to go back to heaven with a debt. I think it's Koboku or Cain. With all the resources God has given you, this is what it is. So when we say this, I'm not telling you to make you happy, but I'm asking you to open your eyes. Canada is a system. If you're not in that system, for most people that are here, they're not even in Canada. A lot of people are in Canada, but they don't live here, based on how much you earn. It's a system. You have to take up advantage. Health insurance makes sense. Life insurance makes sense. You build wealth while you are alive. With life insurance, like he was mentioning, you can borrow from your premium. The premium can even grow depending on which you choose. You can do that for your children. You can use the money borrowed from it, or what is called cash value. You can use your cash value to renovate your kitchen. You can use your cash value to pay for a down payment for a new house. Because if you do that, over years, your cash value grows. That's why you see, oh, this young person just bought a house, or this person just did one thing or the other. This is not home. This is not where we're coming from. Like he said, he came all the way from Iraq and he built from the scratch, and today it's a different ball game. I want to encourage us. When do you think you need to put in those coverages for your family? Today? Next tomorrow? Next year? The best time I can tell you to do that is yesterday. Ladies and gentlemen, is there any more question? I want to ask you to put your hands together for yourselves. Coming in. That's to tell you you're losing time already. For me, it's an emergency. Last year, I was asking people to send money around. A young guy came in here from the US with the family. Young guy, maybe in his 30s. 3 children. They crossed the border, came in and tried to get a better life. The guy was eating at night. All of a sudden, boom, he died. And this guy is even from my state. Boom, just like that. 3 children, they've not even settled in. So, these things you never know. We don't wish anybody evil. But while you're still living, there are benefits you can gain from life insurance while you're still alive. You can raise resources to start up a down payment, hand over to your children as for weddings. You can do a lot from your cash value. So why do you wait? God bless you. All right. Okay, sir.